Private equity firms were salivating over the chance to raise money from sovereign wealth funds of oil-producing countries. Those opportunities, though, have not quite played out. Here to talk about that and other challenges of marketing private equity funds is Jeremie Le Febvre. He's managing director at Triago. Forgive me, I want to get it right. Triago, which helps firms raise capital. Also with us, Bloomberg's own Cristina, Alesci, who covers private equity on our deal desk. It is definitely Friday around here. Jeremie, this is a great story because I think everybody thought the sovereign wealth fund, especially in the Middle East, had so much money. It was a logical place to go, but it really hasn't worked out. How come?
Well, I think, first of all, there's a whole urban fundraising myth around the Middle East where most private equity firms thought that post a crisis, the Middle East was going to fill the gap created by all other investors. Now, the reality is that the Middle East, like any other investor on this planet, suffered quite significantly from their exposure to European and North American deals. And as a result of this, a number of investors decided to, first of all, slow down on investments and refocus on their own region, which they knew best. There was also another trend, which, as many other foreign investors, which was to refocus on investments in Asia, for example, which is clearly an area of interest for investors all across the globe.
So basically, hedge funds, private equity firms were hiring people to go over there and try and get money and thought they'd come home with bags of it. In reality, the investors over there got hit as well, and they had their own things to invest in already at home.
That's correct, and that's where the urban myth lies. Is that during a number of years, and it's hard to say who's right or who's wrong, but a number of Middle Eastern investors were in spraying mode, subsidizing private equity to a certain extent, and decided post-crisis that maybe now was the time for rationalization and perhaps a more in-depth due diligence work on who were the performers worth supporting and who were those that just didn't make the cut.
You know, to your point, actually, KKR hired the former ambassador to Saudi Arabia to go to Dubai. I guess he was based out of to go ahead and start a fundraising effort there. And Carlyle makes a big effort about talking about its strategic partner with the Sovereign Wealth Fund of Abu Dhabi, Mubadala. And David Rubenstein has been, I think we have one of his quotes, you know, he's been publicly out there saying, aligning Carlyle with Mubadala. So you kind of see the desire for these firms to really align themselves, but that hasn't panned out. Now, Jeremie, something.
The first part of his quote was right, though, for sure, right? I mean, they do have a lot of money over there, but stability's not really the name of the game in the Middle East anymore.
They do have a lot of money, but they've spent a lot of money as well, which, if you compare it with Asia, is also a big difference. I mean, there's this whole fantasy about dollars coming out of, oil wells, and that is just going to go out to everyone.
What about all the turmoil, Jeremie, in the Middle East that we've been tracking, day by day here? How's that kind of complicated the picture?
Look, I would tend to say that it hasn't overcomplicated the fundraising picture, which is different from than the deal activity one. Clearly, private equity deals in the region have been put on hold, most of them. In terms of the fundraising, the only comparison I would make, which is unfortunate, is there's been a war in Iraq for many years now, and it didn't prevent a fundraising boom in 06 and 07, and these investors committing massively to private equity. So we will see it. It's hard to forecast how that will impact. There are a number of elements in the Middle East which could create a potential problem. Libya is one. Clearly, the situation in Bahrain, but keep in mind that Bahrain is a relatively small country, but one could wonder about the health of the King of Saudi Arabia and how that could affect the region as well, should he pass away. So there are a number of factors which create some form of vulnerability in the region.
I think it's interesting that you bring up the wealth of Asia compared with the wealth of the Middle East. I mean, there are investors, there are funds going to Asia and indeed coming home, or at least until the earthquake, with bags full of cash, right?
Yeah.
I mean, it was working there.
Yeah, I was actually at KKR Investor Day this week, and they said that overall last year they raised about $5.4 billion, and $1 billion of that came from China, for a China Growth Fund. And that fund specifically invests in small companies, so it's an even more specific strategy than just an overall China fund, but this is, money going to smaller cap companies. The one thing that I wanted to ask you, Jeremie, is why is it important for these larger players to get into emerging markets?
Well, look, I think there's one simple reality, which is that the traditional fundraising markets are drying up, or that just the population of investors isn't rejuvenating, and that you do need to go tap into new sources of capital. And Asia, with half of the world's population, is clearly an appealing place. That's where the comparison with the Middle East is has its limits.
And all big savers as well.
Right. I mean, clearly, you have the Chinese. I mean, if you limit your thought to China, which hasn't been committing over the years to this asset class, it's starting just now. So it's obviously in a very advantageous position.
Cristina and I were talking earlier. I mean, the U.S. pension funds are essentially tapped out. So you've got to look for other avenues in terms of capital. Yeah, as a general statement, yes. And then if you look at Australia, so at the other extreme, its pension system is very much similar to what you have in Canada, with every Australian employee contributing 9% of their salary to pension funds. These have been over the years essentially contributing to the domestic market, and obviously the domestic market has its limits. Today they have to expand. So it's a combination of private equity funds going to these regions to tap into it.
But it's trickier to get that money, though, right? I mean, it's not as easy as it is to do it here.
It is because
there's a culture divide, first off, and then you spend more money going abroad to do that.
Of course, because you're in a post-crisis situation where those investors saw how other investors were hurt, and they don't want to replicate.
They've learned, haven't they?
They've learned.
Yeah.
They've learned. And as they're getting into this asset class, alternative overall, they don't want to do these mistakes.
How much more costly is it, though? That's, I think, a great point, how the environment has changed. How much more costly, then, is it for everybody?
Look, I think it's... cost is difficult to evaluate because money can be raised in China without flying to China, and money can be raised in China.
But at the same time, KKR had to bump up their marketing staff. They had one person 3 years ago. Now they have 37. So that's 37 salaries.
So your question is, how expensive is a U.S. ambassador?
Exactly. Not to mention the slush funds and the kickbacks and everything that you probably have to deal with.
Wow. Jeremie, thank you so much. Great insight. We really appreciate it. And our own Cristina Alesci, thank you so much.
Thanks, guys.
Thank you very much.
We are going to